stock that's in focus today on the back of their analyst meet that was held over the weekend. We have some key takeaways coming in from DLF's analyst meet. That stock is up about 2% in today's trading session. And let's understand what Nomura and Antique, both of them have come out with brokerage notes on their key takeaways. First up, let's talk about what Nomura is making of this meet. They've pointed out in the very first line itself, there's been no surprises when it comes to their analyst meet. Nothing new has been announced. The guidances have been reaffirmed and nothing has been increased or decreased. It's been maintained where it had been given earlier. So on the back of that, they've reiterated their non-consensual neutral rating on the stock with a target price of 700 rupees per share. The management has maintained FY26 pre-sales target of roughly 200 billion. That translates to roughly 20,000 crore in rupees in crore terms. And medium-term launch pipeline target has been kept intact at 740 billion. Cumulative annuity income is being expected to grow at a CAGR of roughly 15% until 2030. The company has kept its launch pipeline largely unchanged at 739 billion. Now, the only difference over here is that the Mumbai launch pipeline that they had, that sums up roughly 35 billion of their overall launch pipeline, that has been moved to FY26 compared to the end of FY25. So there's a slight bit of a lag on that front. They believe investors may have been slightly disappointed by the management's conservative pre-sales guidance for FY26. The value of FY26 new launches is pegged anywhere between 150 and 170 billion rupees, and the current valuation already prices in long-term growth potential, which is why they're not over the top bullish on this stock, and they've maintained their neutral rating. Moving on, let's talk about Antique. They have maintained a buy rating, but they've cut the target price to 863 from 1014 earlier. So that's quite a steep cut coming in on the target price. They believe that the pre-sales growth is expected to be modest going forward at best. The company is focused on growth through its existing land bank, and there's no need for any new acquisitions, is what Antique is pointing out. They have strong visibility for the next couple of few years, and annuity business is a steady compounder to more than double its rental revenue to 100 billion by FY30 from 46.3 billion right now. So that's also something that's looking good right now. However, because the sales growth is expected to be modest, land valuation, that value will be marked down. So that's something to be cautious about, and they've revised their pre-sale estimates by 15%, 0% and a minus 7% cut for the next 3 years. So that is also something that's looking shady. They've also reduced their EV to embedded EBITDA multiple from 17x to 15x. So slightly cautious notes coming in from both of these brokerage houses, but nonetheless the stock is up 2% in today's trading session. Well, on that note, let's also go across and listen in to Nikunj Dalmia's view on DLF. Earlier in the day, he shared his views as well. So let's go across and revisit that take.
DLF Analyst Day seems to be indirectly endorsing what markets have been ignoring. FY25, no problem. FY26, a bit of a problem. Now, the word bit of a problem can be attributed from the fact that they have not given what could be called as an extraordinary charged up guidance for FY26, which is the pre-sale guidance what you get, or the indication what you get. It's not an absolute number what they've shared, but they've shared an indication. That also is a hint that somewhere luxury real estate either is hitting a time-wise pause or a demand sluggishness seems to be coming in. Now, DLF is India's largest real estate company, and they pretty much give you the flavor of what is happening in NCR region and perhaps other parts of India. And if DLF is talking about, and DLF has a commanding premium, they have a great brand, exceptional when it comes to the kind of residential projects they've built up, especially in NCR region. Well, if they are feeling the heat of slowdown, and imagine the real smaller builders who do not have the pricing power, they essentially will also feel the same. So I expect the stock to react today. I expect the real estate stocks in general, because of this DLF factor, could remain under pressure. Let's see how Prestige and Brigade and others they negotiate. But if DLF is feeling the heat, trust me guys, it's a matter of time. Others will have to also start calling out that FY25 is good and FY26 is going to be a hard one.
If you like this video, then like, share and subscribe to ET Now.